Hello, this is the first video in a series of building out discounted cash flow models and really giving you an opportunity to think about how to better evaluate the long-term prospects of an investment or a company that you're considering investing in. And I wanted to break down a couple core elements of what some of the bigger funds and what current quantitative analysts will do to really intelligently evaluate the long-term prospects of an enterprise. So, I think a lot of people would start this video saying like this is not financial advice or something like that. I'm not going to do that because I think that the average American deserves a lot of this information to be able to use and leverage for themselves the same way that Wall Street leverages this data to make themselves trillions and trillions of dollars. So anyways, we have 6 core principles that we're looking at when first building out a discounted cash flow model. And again, this is the first video of many, and in the subsequent videos, I'll go through the model with you and really build it out in a way that makes sense so that you can better understand the price that you're getting, the value that you're getting, or the potential growth that you're receiving from a given stock or company. So we're going to be looking for 6 things when I first start off here over on the SEC website. It's going to be current price or last price. So the market operates on a last price basis. And let me just actually have Tesla here pulled up. This is the example I wanted to do is Tesla. So the last price of Tesla or the current price is $985, which all that means is that's the last price that it traded at. So if somebody bought it at 984, that would have been the last price. But somebody bought it at 984 and then sold it at 985, let's say. And the market recognizes whatever the most recent price that a stock traded at as the current price. So, and then we have SO, which is actually just shares outstanding. We have market cap, market capitalization, the cash a company has, the debt they have, and the enterprise value or the EV of a company, which is going to help us determine more complex equations that we'll get into in later videos, like EV over EBITDA, and that'll really help us determine, the value upside of a company. So, market cap is also going to be listed here. I just go to finance.yahoo.com. It's the most valuable, I think, product that Yahoo offers is their finance suite. I'm going to list these out in billions, okay, just because we're dealing with very large numbers, okay. So we have 1,018 billion, also known as 1.018 trillion. 1,018 billion is the market cap. Shares outstanding, I'm going to show you how to find the shares outstanding, the cash, the debt, and the EV. We go to sec.gov. We click on filings. Okay. Search for company filings right here. Company or fund name, ticker symbol. And the ticker symbol for Tesla is TSLA. Boom, it's right there for us. Excellent. Right on the side, you'll notice a 10K. So there's things called a 10K and a 10Q. A 10Q is a quarterly report, and a 10K is an annual report. And I have this stunning visual prepared for you guys. Excellent. Here we go. So a 10K, there's going to be one of these issued on an annual basis, of course, because it's our annual report. And then we have a 10Q. Oh, it's quarterly, and there's 3 of those. And the final quarterly report is also wrapped up in the 10K. Okay, so we have 4 reports altogether. So I'm just going to click on this. Let's expand it. Oh, excellent. February 7th, 2022, we got a 10K, or the annual report for the year. Let's go ahead and do that for sure. Now, this is Tesla's corporate filing to the SEC. Always on the front page. So you'll notice basics of the company, right? Where we're located, state or other jurisdiction. It's probably going to have Elon's name on here somewhere, NASDAQ. But it's also going to have for us, as of January 31st, 2022, there were 1,033,507,611 shares of the registrant's common stock outstanding. Excellent. I'll go back over to shares outstanding. And again, remember, I'm doing this in billions, except for the current price, which is 985. Let me just delineate it like this so we don't get confused. Okay, shares outstanding. So I have 1.033 billion. Now the cash and the debt are going to be listed right here in item A, financial statements and supplementary data. I'll click on that. I'll scroll down a little bit, gives me some legalese. And then boom, I get right into it. And it shows me in millions the line by line by line balance sheet of Tesla. This is excellent. Okay, so cash and cash equivalents. Yep, I'm absolutely going to factor that in. So that's going to be one of the things that I look for cash. So 17,576 million. Whoa. So that's 17.576 billion. But we also have other cash considerations. So let's look here. Short-term marketable securities. Yep, I'm going to count that. Short-term marketable securities would be things that Tesla would be able to liquidate in the event of a Mad Max scenario, and that's ultimately what I'm looking for when I think of cash. They also have accounts receivable, which would not be listed as cash. Neither would inventory. Inventory is like straight up metal. I mean, that's like cars, sitting at a warehouse. So we've got a ton. We've got $5 billion worth of cars just sitting in inventory. I'm not going to list that as cash because if the government or if anybody else were to come calling and say, "Hey Tesla, you owe us money," well, it's kind of hard to get rid of that much value just in produced metal, right? Or glass or sound equipment or whatever it may be. Accounts receivable would be like, I don't know, a client received a Tesla in their front driveway and they haven't paid Tesla for it somehow. Tesla opens an accounts receivable saying we still, are expected to receive income from that client. Again, I'm not going to list that as cash for what we're trying to do because it's not going to make sense. Okay, so we have 17.576 plus 0.131. Excellent. So we have $17.707 billion worth of cash. Now, in debt will also be listed. You'll notice liabilities right here. Okay, and now accounts payable, I absolutely do want to list that as debt. So that's going to be like, hey, we received $1 billion worth of glass from a glass company, but we haven't paid them yet. So that's absolutely money that is owed, and that is considered debt. So we have 10.025 in accounts payable. Accrued liabilities and others, yeah, sure. I'm going to list that for sure. Okay. So I've got 10.025 plus 5.719, 15.744 is going to be my debt. Okay, excellent. And now to identify the enterprise value, I'm going to list a little equation here. Okay, so market cap minus the cash a company has, but plus the debt is equal to the enterprise value. Okay, so again, actually, let me get my calculator back up here. So we have the market cap, 1.1018, right? Minus the cash is 17.707, plus the debt, 15.744. Boom, 116.037. So this is the enterprise value of Tesla. And that may seem a little counterintuitive, right? Like you may be thinking to yourself, and actually let me put that back up. You may be thinking, okay, well, why would we subtract the cash but add the debt? That doesn't make it, like, wouldn't we want to add the cash and subtract the debt to get the actual value? Well, enterprise value is different from the value. Okay, so let's think about it this way. Let me do this. Let me actually just scroll down here. So if I just have a box and I say that this box is Tesla, that's a terrible E, but whatever. So this is Tesla. And hey, if you wanted to buy Tesla, you have to pay whatever is inside of this box. Well, if you came and let's say like all these other lines were crossed out, like let's say we didn't consider shares outstanding, we didn't consider the market cap. Let's just say Tesla didn't have anything to their name except the $17 billion in cash. Well, how much is Tesla worth then? They're worth probably $17 billion in cash, right? Like it's just you're trading dollar bills for dollar bills. So for that reason, when figuring out how much it's going to cost to buy this box, because that's really what enterprise value is, we're not going to factor in the cash. I will factor in the debt though. I'll say, hey, if you want this sucker, you got to pay 15.74. Like just to let you know, we've got $15.744 billion worth of debt that you're going to have to tack on to whatever price you pay. Okay, so hopefully that gives you a better understanding of why EV is calculated this way. Now, in following videos, we're going to be doing things like EV over EBITDA equations and alongside others. And EV over EBITDA is enterprise value over earnings before interest, taxes, depreciation, amortization. It's going to get us a better context and really help us color our view on the stock in a better way of understanding its potential trajectory and the range of outcomes that it may fall within when considering future stock prices. So hopefully this is what excuse me, hopefully this was valuable to you, and would love to see you tune into the next video. If there's any other videos that you want me covering, somewhat along these lines, be happy to do them. But in future videos, I'll kind of go along side by side with you and build out this cash flow model. So thanks for watching.